This morning, one stock on Wall Street did something almost no biotech does in a single trading day. It didn't creep up. It didn't drift. It rocketed from just over $2 to nearly $4 before lunch. And by the time the closing bell rang, it had gained almost 90% in a single session. Traders who had never heard the name before 9:30 a.m. were suddenly watching it light up. Every stock scanner in the country. So what happened? And more importantly, is there still time to get in before the next leg up? Let's break it down. The company at the center of this move is a clinical stage biopharmaceutical business that has spent years working on something most people don't think twice about. But that changes millions of lives when it goes right. They build oral versions of medicines that normally have to be injected. Think about that for a second. If you have a chronic condition and your treatment requires a needle every single day, or every week for the rest of your life, that is a massive burden. It affects whether people actually stick with their treatment. It affects quality of life. And it affects the bottom line for insurers and hospital systems. This company's entire platform is built around solving that problem, turning injectable peptides and proteins into a simple tablet you swallow. Their lead program targets osteoporosis, a bone disease that affects tens of millions of people, especially older women, and one where the current standard of care is, again, an injection. Their oral version has already made it through phase 2 clinical trials, and the early data has been strong enough that analysts have kept price targets well above where the stock was trading just yesterday. But clinical progress alone rarely causes an 89% single-day pop. Something else had to happen. And it did. Yesterday, the company announced it had closed a private placement, a direct sale of new shares and warrants to institutional investors. And this one wasn't just filled, it was oversubscribed. That means more investors wanted in than the company was even offering shares for. The raise brought in $275 million. At a price of $2.04 per share, for a company with a market cap that was sitting under $200 million before this news broke. That is an enormous vote of confidence from sophisticated money. When institutions oversubscribe a placement like this, it usually means they've done deep diligence and they like what they see, both in the near-term catalysts and the long-term pipeline. As part of the deal, one of the investing firms is also gaining the right to appoint 2 directors to the company's board. That is not a passive investment. That is a firm that wants a seat at the table, wants influence over strategy, and is putting real weight behind the belief that this company's technology is worth building around. When you see board seats attached to a financing round, it tells you the smart money isn't just trading the stock. They're trying to help steer the company. Now let's talk about what this means for the balance sheet. Because this is where a lot of penny stock stories go wrong and this one goes right. Clinical stage biotechs live and die by cash runway. Burn through your cash before your drug gets approved. And you're forced into a dilutive raise at a terrible price. Or worse, you're forced to shut programs down. This $275 million infusion effectively removes that fear for a long stretch of time. The company can now fund its osteoporosis program, its other pipeline, candidates targeting conditions like hypoparathyroidism and metabolic disease, and its ongoing regulatory work, without the constant threat of running out of money hanging over every press release. Here's the volume story, because volume is what separates a real move from a fake one. On the day of this rally, well over $300 million worth of shares changed hands. That is an enormous amount of dollar volume for a stock that a week ago barely anyone was tracking. When you see that kind of volume paired with a genuine fundamental catalyst, not just a random meme pump, it tells you institutional and retail money are both piling in at the same time. That is exactly the kind of setup that can keep momentum going for days, not just hours. Zoom out and look at the 52-week range on this thing. This stock traded as low as 91 cents within the past year. It also touched a high above $4 during this very rally. That means in the span of 12 months, this stock has moved more than 400% from its low to its high. That is the kind of volatility that scares away conservative investors and absolutely thrills traders who know how to manage risk. Analyst price targets on this name have sat as high as $9. And even after being trimmed slightly earlier this year, they're still sitting well above where the stock is trading right now. even after this massive pop. Of course, none of this comes without risk, and I want to be straight with you about that. This is still a clinical stage company. That means no approved, revenue-generating drug on the market yet. That means every trial readout, every FDA interaction, every regulatory filing has the power to send this stock violently in either direction. Small-cap biotech is not a place for money you can't afford to lose. And a single-day gain of 89% can just as easily reverse in the days that follow if profit-taking kicks in. This is a trade for people who understand volatility, not a replacement for a long-term core portfolio. But here's why this one is different from the typical penny stock pump you see flooding your feed. This wasn't triggered by a random Reddit post or an unverified rumor. It was triggered by an oversubscribed institutional raise, real board-level involvement from a healthcare-focused investor, and a clinical pipeline that already has positive phase 2 data behind it. That combination of a funded balance sheet, institutional conviction, and real science is rare in the penny stock world. And it's exactly the kind of setup that can turn a one-day spike into a multi-week trend if the momentum holds. So keep an eye on the ticker. The name behind this 89% single-day move is Entera Bio, ticker ENTX, trading on the Nasdaq. If you want to track the next stock before it makes a move like this, hit subscribe, because we cover these setups the moment the volume and the catalysts line up.